Where this pre-market sell-off brings us, just to situate the markets here a little bit, is right down to the lows of October, right? So that was a week ago, Thursday, 2710. Just take a look at the S&P 500 year to date. If you look at a line across 2710, that was the intraday low from Thursday a week ago, and then 2728 was where you closed. So it's, in other words, everyone who says, oh, you have these sharp sell-offs, you need to have some kind of a retest of that. Well, maybe that's what this is. But by the way, it was a weak bounce. The rally off of those oversold conditions was not impressive at all. You didn't get much distance between the lows and where you ultimately bounced last Tuesday. So it seems like it's still a kind of a suspect market right now in terms of how it's behaving. We didn't get a lift from a 4% pop in Shanghai yesterday, and now it seems like you're dragged down. So what's going on with the banks is a huge question right now. Down 2% yesterday for the S&P financials. Almost the idea that we can't exactly point to one particular thing, I don't know if it's more or less concerning, but that's something that probably has to stop. Nothing that's going on is
bringing down the bank stocks.
What's that?
You mean we can't?
What specifically is? I mean, obviously, European banks are very weak because of all the things we know is going on there. I mean, the yield curve is not helping, but it's not getting any worse.
Right.
The bank earnings were fine,
right.
And I think that's the thing that people step back and say, well, maybe that means earnings can't save us.
One explanation I've seen is that the free money that they had for so long, you know, those deposits that they paid zero on, now they have to pay more, or people are taking their money out and putting them in higher yielding. You can finally get a yield somewhere else. And so they've actually lost some of that spread, even though we're so focused on the long term. The short term is
no doubt about it. They have to compete for customer money right now in a way that's tougher than before. Also, I would point to the Bank of the old Bank of the Ozarks, which is now OZK Financial or whatever. Tremendous earnings warning on commercial real estate the other day. Stock was down huge. That seemed to kind of be a little bit of a shot across the bow of the regional banks as well.
Is that a canary in the coal mine?
It could be. They were a very aggressive commercial lender and got into a lot of kind of hot markets on the later side. So I just think all that stuff is in the mix. Now, you step back and say, well, the credit markets are not really making a fuss. So if you think it's some kind of a financial stress event globally or it's some kind of an economic downturn thing, it's not showing up there.